All right, let's analyze some of the activities in the market this week. And we have Maudi Lentswoane, who is Managing Director of Lehumo Capital. Thank you very much for joining us.
Thank you for having me.
All right, I've just heard in the report about the performance of the rand. 13.26 this morning. Tell us about the direction which this currency is taking now.
13.26 this morning. I think currently we're sitting around 13 rand and 13 cents. We've seen quite an improvement from this morning. And this is primarily because we had some job data out of the US. Those numbers, in terms of the number of jobs that have been created for February, have beaten the expectations. Unemployment also came in better than, as expected at 4.7%. What is a bit of a negative is the wage growth. You know, while we're seeing all these good numbers, the job numbers from the US, what has not really been coming forth is the wage growth. And I know that we know that that's quite a significant number that the Fed looks at, because that determines whether, you know, the inflationary outlook, how the percentage at which the wage is growing, it gives us an indication of how fast the inflation will grow and how aggressive the pace of the rate hike should be from the Fed. That number continues to come below the expectation, and I think that's the reason why we've seen the appreciation of the rand versus the US dollar.
Then looking at the acceleration of the price of oil, and then later on it coming down. It was hovering at around $59 at some stage, and at the moment it has come down. What is actually affecting its movement?
The price of oil is impacted by a couple of things. One, you know, we know that a couple of months ago when OPEC members decided to cut production, their main objective or goal was to try and boost the price of oil, because for a very long time they had set with the price of oil, which was at a significantly low level. They needed to boost that because the countries such as Nigeria and the other OPEC producers who are producing at the cost, slightly higher cost, they breaking even around $70, the likes of Nigeria's, they were not profitable. They are not profitable at these sort of levels. So OPEC members for the first time, they came through and agreed that they're going to cut production to try and boost the price of oil. The biggest problem is, by doing that, they're encouraging the shale producers out of the US, because now the price is picking up. It becomes more attractive for those shale producers who had been driven out of business for a couple of months ago to now come back and begin to produce profitably. And I think what those shale producers have done cleverly, when they were driven out of business because they could not, it was not profitable at these sort of levels, they've gone out, researched new technologies to make it profitable. Right now, those shale producers are able to make profit with the oil price around $50, you know, $55. So by OPEC members cutting production, which is in their mind, they're trying to boost a price, it's not working because those shale producers then come back into the market and to continue to produce. We saw the oil inventories out of the US on Wednesday. They've increased. It tells you that there's now, look, the price looks attractive, those shale producers comes back, and the price comes under pressure.
And that's creating a surplus.
That's the main driver of the oil price. I think for a long time, we're going to sit with the oil price at a significantly depressed level for as long as we don't have the global GDP really improving. Until we have the global economy and the natural demand for oil picking up, the OPEC members are going to find it very difficult to try and drive the price higher.
Now, looking at the iron ore, copper, platinum, and gold drops, what does this mean? I mean, I've been seeing that there has been a very significant drop in the price of platinum.
Yes, so as I mentioned, on the oil, that is one aspect of why this commodity has been under pressure. But the other factor is the dollar. The dollar has been strengthening, and I think that strength in the dollar is putting that pressure on all these basket of commodities, including oil, copper, and iron ore. The other third element to that, I think, if you bring in China, there's a lot of questions mark around the growth focus for China. It looks like China might not be able to grow, you know, at a very high percentage. We saw 2 days ago with the minister, the premier from China, you know, saying the GDP growth for 2017 is expected to be 6.5%. I mean, that's compared to last year where the target was between 6.5% to 7%. That's significantly lower. So the main driver of iron ore, we know that the biggest consumer of iron ore is China. And for as long as there are question marks around China economy, we are certainly going to see a lot of question marks around it. The BHP Billiton CEO came out and said they're very, you know, concerned about they're not too optimistic about the price of iron ore. We saw that, iron ore coming under pressure. So I think it's around China, it's the dollar, exactly how aggressive the Fed is going to be going forward. And those are the things that are actually impacting negatively on these commodity prices.
I think before you go, we should take a look at how the markets are doing, because now it's a Friday, and when they're closing, we want to see the direction which we're going to take. Let's take a look at how the markets are now. Yeah, well, as you can see, the all-share index is up by 0.83% at 51,334. Now, the commodities that you have been talking about, gold 1,204, platinum 941, and the oil price $52.73. Looking at the currencies now, we've been talking about the dollar, 13.16. Particularly now, other currencies, looking at the British pound, is at 16.03 and then 14.1 cents to the euro. Now, let's go back to the dollar and the expected announcement during this evening. Janet Yellen is expected to talk about the direction which the Fed is going to take, especially regarding the jobs numbers that will come out.
The job numbers have already come out. They came out at 3:30 today, better than expected on the actual numbers. I mean, the expectation was for 200,000 jobs to be created. We had 227,000. So that's a beating expectation. Unemployment, expectation was for 4.7. It came out exactly at the expectation. The one that disappointed is the wage growth. Came in, expectation for the month was for 0.3% increase. It came in at 0.2. So it tells you that while the U.S. economy is growing, and it's growing so well, the wage growth is not coming forth. And that's why we see the reaction on the rand appreciating against the US dollar by 10 cents compared to where we were this morning.
So are we going to see the Fed increasing the interest rates?
The Fed will hike, because the Fed does not want to be behind the curve. Remember what they're doing is that they're normalizing what was an abnormal situation. For a very long time, we sat with the interest rate at a significantly lower level. And that was necessary because the U.S. had to really boost the economy, the U.S. economy, to get out of that long recession that we had. But we're now returning to normal. And it's very important that they don't stay far behind the curve, because that could also be very dangerous.
All right, Maudi Lentswoane giving us his analysis of the market this week and bringing us to the end of our business segment for this time.